And now, because we're talking so much about money, I think it's only appropriate that we shift to the folks that really control the money, and we've got an abundance of it for our pre-lunch discussion to whet your appetite. And then after lunch, we'll have a very funny session with an Israeli who has created many companies and is still creating them, still finding his perfect spot. And we have some discussion with the famous Jeff Pulver on living life. And then we have a wonderful session with the creators of Dig and Homeland and Yossi Vardi, Gideon Raff, Tim Kring. And then we have a real blockbuster on Absolutely. We have an Absolutely competition, followed by Siberia, all about cyber. And with that, I'd like to bring up our session on VCs on the beach. Coming up, our surfers are coming on up. This panel will be led by Bruce Tarragon of Blumberg Capital. We also have Esther Barak-Landis of Nielsen Innovate. We have Audrey Jacobs from OurCrowd. We have Dylan Boyd from the Dodgers Accelerator. We have Hamay Watt from Upfront Ventures. And we have Elizabeth Yin from 500 Startups. And if you have to calculate all the money they manage, you'll know that it's a nice, big, round number. So if you're thinking of a venture and you're thinking of an approach, these are the people to come to meet right after their session and join them in conversation during lunch. Take it away and help us understand how money on the beach flows into Israel and other companies. Thank you.
Sharona, thank you. Bruce Tarragon, Blumberg Capital. It's great to be here. We have a fantastic panel, so we'll try as best we can to hit on interesting, relevant topics for folks in the room. And then I would say, just Sharona, I don't know if someone has a microphone to walk around with questions, but just raise your hand and we can always try and do that as well. But why don't we very briefly, if everyone can just do a quick, brief introduction, yourself, your firm, and maybe either your latest investment or something, kind of an area of focus and interest. And I'm going to have to, as the moderator, since we have a lot of people, not a lot of time, I'm going to gong people and jump in, and no commercials and no wisecracks from the audience. Let's take it away.
I'm Dylan Boyd with RGA Ventures. I've been building corporate partnership venture programs for the past 4 years with a lot of companies from Barclays, Disney, Sprint, Nike, and now here in Los Angeles with the LA Dodgers in sports and entertainment technology.
Hi, I'm Suraj Rachwani. We manage a fund out of Menlo Park. Our fund thesis is primarily investing in the enterprise layer, anything in big data analytics down the stack, and with a focus on IoT and security. Our latest investment is in a company based in Palo Alto and San Francisco called Silk Labs.
Wait, just briefly, what do they do?
They're essentially trying to build the fabric for the Internet of Things layer. With Google having their own Brillo project, Cisco having their own IoT mission, Silk is trying to be the independent fabric connecting all your IoT devices, and it's built on Android because Android is the open source platform right now that they're defined as the most scalable.
Great.
Hamay Watt, venture partner at Upfront Ventures. Upfront's been around for a while. Our old name was GRP Partners. We changed our name about a year ago because we're not focused on retail, which is what the old name stood for. We're investing out of our fifth fund. It's about $300 million. All the other funds are around the same size, and we're focused on early stage technology companies. In terms of a recent investment, I'll mention a company called Nanit, which where the CEO is actually from Israel, but it is a baby monitor that uses computer vision to do some fun stuff around the baby's biometrics and also how fast the baby's growing, how many hours they've slept, that kind of thing.
And what's sort of emblematic for you, in terms of structure? Like, how much did you guys invest? What was the size of the round? And who, if you could talk about valuation.
In general, we're a Series A investor. We do some seed sometimes as well. Our average check size is right at about $3 million in terms of our initial check. About 60% of our investments are in the Southern California, Los Angeles area, but we invest all around the world.
Got it. Great.
Thank you. I'm Audrey Jacobs with OurCrowd. We're based in Israel, and we launched 2.5 years ago. We have invested $160 million into 80 companies, 80% in Israel. We're investing in every sector of technology and every stage, from early stage to pre-IPO. And what makes us unique as a VC is that we enable individual investors globally to invest alongside us at a minimum of 10K. Our most recent investment that we're doing right now is Replay Technologies, which is a virtual reality technology that allows you to watch sports in 3D.
Now, Audrey, just for a second also, OurCrowd is, and there are actually a few of you on the panel that I would say are trying to really disrupt venture capital with different innovative types of platforms and approaches to venture investing. So what would you say for the entrepreneur is, the benefit, why go with OurCrowd? What would you say is unique and differentiated from sort of a classic venture firm?
One thing I will say is our entrepreneurs do say that we're a nice VC, but really in terms of value add is the fact that we have 10,000 accredited investors from over 100 countries. So if a company truly has a global go-to-market strategy, we're able to tap into our very powerful and highly networked investor base to help leverage their growth.
Awesome.
And again, we're one line on the cap table.
Got it. Hopefully it's a large...
It's minimum $1 million. We just finished, I think, writing a $17 million check where we led around with a couple of other major corporates.
Wait, how much did you guys put in on that round?
The round was a $25 million round, and we're putting in 17.
Wow. Oh, okay. So
we're writing big checks now.
Yeah, that's serious. We got to get more money from you guys on some of these other companies we're
talk
co-investors
later.
on.
Okay.
Esther, what about you? A little bit on your company and sort of the incubator approach, if that's appropriate word.
Nielsen Innovate is an incubator and an early stage VC. We invest in seed and pre-seed and up to A rounds. We are also backed by the OCS, so the chief scientist. So for every dollar that we invest, we get $5 from the government, and later on, for every dollar, we'll get $1. So we invest anything between $500,000 to $2 million per company. All our companies are, at least at the beginning, based in Israel, working out of our facilities for 2 years.
And where are you guys in Israel?
In Caesarea. Okay. But our partners are Nielsen, so our main focus is to find companies that are either in Nielsen's business or can help Nielsen's business or Nielsen's customers' business. Nielsen has 20,000 customers all over the world in 100 countries, between media, retail, e-commerce. So we're looking to really bring added value to the companies with the opening doors and the go-to-market.
And what's been your investment pace? I mean, 2016, how many companies do you expect you'll incubate?
We invest in average every year in 5 companies.
5, okay.
So far we have 14 companies. It started 3 years ago.
So I think it's a good segue from 5 to 500.
Hi, I'm Elizabeth Yin. I'm a partner at 500 Startups. We should probably change our name because we've invested in over 1,200 startups. We've been around for less than 5 years. In fact, this year's our 5th year birthday.
You're going to list them?
If anybody could do that, that would be a feat. I joined more recently. This year, I run the Mountain View Accelerator program. We run our Accelerator program 4 times a year. We also invest just a regular seed check as well. So there are a few different ways to raise money from us. Our average check size is around 100K though. So small checks, no matter what. We tend to invest these days in later stage seed companies. So these are companies that already have a product. They're already making some money. I'd say in general, the numbers, this is not a hard and fast rule, but companies come to us when they're making around 10K per month in revenue and up. So that would sort of be the minimum bar-ish. And we invest globally. We've done a number of investments in Israel. Don't ask me to list them. I can't really list any of our companies. We have a venture partner named Adam Benayoun in Tel Aviv, and we plan to do a lot more investments in Tel Aviv and surrounding areas.
Awesome. And then just briefly for me, Bruce, Blumberg Capital, we're currently investing out of our 4th fund. It's a $200 million fund. We're focused on seed and early stage. One of our most recent investments, and probably an area that I imagine some of my colleagues are active in as well, is cybersecurity. I could tell you what we invested in, but then I'd have to kill you. So it's still in stealth mode. But an area, there's sort of artificial intelligence, machine learning, and then deep learning sort of as a subcategory of that. They're applying deep learning to malware, protection. It's almost, I would say, to a certain degree, it's like a next generation of Cyvera, which was another cybersecurity company we seeded out of Israel a few years ago and sold to Palo Alto for $200 million. So the cyber is definitely a hot area. I guess let's jump right to it for the panelists, the audience. Everyone here wants some money. Actually, let's raise a hand. Who here are entrepreneurs and looking to raise some financing?
Not that many, or people are shy, one or the other.
Yeah, are you in the wrong venue?
2, 3, 4,
Some
5.
people came to the museum, the cultural center. It wasn't. So really, not that. Are there other investors in the room? All right, make sure everyone raise it higher so that people can see who they want to. Okay, good. So maybe for some of the panelists, who want to jump in, I guess, Ahmet, Suraj, maybe take a first stab. What do folks in the audience have to do to get your attention, to get your dollars? And I understand, I don't know who it is, but apparently someone brought a briefcase filled with cash. That's the rumor. It's in the other room.
One of us on here? One of us on the stage?
Yes. I guess
right.
now you've just ruled yourself out.
At least I'm not, yeah.
Okay.
I get jumped after I leave.
So what do folks need to do to get money from the VCs on the panel?
Yeah, so our fund primarily, we focus a lot on the Series A and Series B, but on a general basis, talking about, getting your financing from your seed stage. I mean, a lot of us look at first the management team. If founders have had pedigree background or they've sold or built companies before, it's something, it's definitely a checkbox in what we look for. It just gives us more confidence that, when you're building your next company, you kind of have that experience. I like to have this analogy that, if you're a great soccer player, you've played for Barcelona and you're coming to Manchester United, you'll probably do well. So that's one thing, and then we look at the market opportunity. We look at what sector you are in. Obviously, cyber is hot. Anything in AI is really hot right now. And then in terms of Internet of Things, and if you combine big data to it, it's definitely a sector that's on the rise. And if you look at a lot of the analysts, whether it's Gartner, IDC, or a lot of these people, they kind of give you a sector of how the market is. And then thirdly, we kind of look at, in terms of, we tend to invest mostly in the Valley, and now we're looking at a few companies in Israel. But in terms of, the people that you connect with, the people on your team, that's kind of the general rule of what we look at, but there's a lot of outliers.
Anything crazy, like something that you look for that no one else looks for, like personality?
We usually look for founders with outsized visions. Something that the founder says, like, I want to have a couple of hundred million from a consumer angle. Maybe I want a couple of 100 million users in 4 years, in 5 years. If the founder can stretch its mentality on what it's possible, that gives us confidence. I'll give you an example. When Brian Chesky started Airbnb at the YC demo day, when he was pitching for money, a lot of people thought this will never work. But if you really spend time with him, understanding his vision, how he operates as how he thinks about the business.
I would agree with that. I'm surprised because I've actually straddled the venture world and the venture world and the entrepreneurial world for most of my career, and I was always trained as an entrepreneur to not go too big and to not scare people. There's
going to be accountability,
the size
and
of the
we
vision.
need to see that.
Yeah, but when I'm on the other side now, I'm like, actually, I want more of that. I want more.
I think
big thinkers.
I think it's important. There has to be a sort of healthy tension, sort of balance. I think between puffing your chest and under promising and over delivering effectively, because you're going to have accountability. So if you come to any of us at different stages and you say, hey, here's what it's going to look like in 12 or 24 months, many of us might marinate that relationship, not invest, and then you got to really be accountable. I'm curious, maybe Esther, Audrey, from the Israel perspective, anything that you would say in your experiences that are maybe different, in the Israel market, and you're both quite early, although I know you're more stage agnostic, But what can you guys speak to in terms of Israel versus maybe the U.S., if there's any difference?
So I think one of the aspects of investing in Israeli startups and what's attractive to us and our investor base is that any Israeli startup is not going after their own local market because there's 8 million people and 22 not-so-friendly neighbors. So every single strategic business plan or deck has a global go-to-market strategy. So we're looking for companies who have a global reach, that have potentially $500 million in sales, that can really tap into the global market. But in terms of if an entrepreneur wants to take away question that they should be able to answer, it would be, what is it about you and your company that makes you know that you will not fail, that you will absolutely succeed? And then what keeps you up at night worrying?
Esther, what about on your side, specifically with the Israel angle? Is there something that you want to highlight that maybe is somewhat unique and differentiated from?
Well, since we are an incubator in Israel, so we insist on the R&D to be located in Israel. And we insist that the marketing and sales will be moving to their market after a while. I mean, after 1 year or so. So I think that after investing in startups for the last 10 years, I realized that what the Israeli companies are really lacking is the contact with the market and the ability to be there early because they are located in Israel. And the market is out there, and you think if you're going for a week, once a month, it's not enough. You have to be there. You have to have continuous meetings. So what we are trying to do is with Nielsen, being all over the place, we're trying to help them open the doors, help them with the relationship, help them. So we're really looking for companies that we can help. This is our target.
Through the Nielsen network.
Yeah, with the Nielsen network. We're not only looking
Nielsen
for companies.
Media Research, is it Nielsen, the ratings company?
Yeah,
oh,
right,
okay.
right. But we're not only looking for companies that will develop R&D for Nielsen. We're looking for companies that Nielsen can help with their customers all over the world, with their
It's
technology.
really bi-directional in terms of the channel. I'm curious now, Elizabeth and Dylan, on your side, Audrey touched on an interesting topic about geographic sort of focus for a company, and you guys are in a lot of different regions. Can maybe each of you speak to the extent you're seeing a trend of, I've seen the trend with Israeli companies. They used to focus on, the U.S., and now there's more of a shift maybe to Europe because it makes sense with, the time, distance and all that, and maybe Asia. I'm curious what you guys are seeing in terms of your investments.
I would add, one thing just to back up what you look for in an entrepreneur. Similar to you, I think. I work with the 10 companies we invest in for about 90 to 120 days every day. I'm here in Los Angeles 5 days a week. I don't live in Los Angeles. I fly in, work with these companies hands-on.
How's that working out for you?
It's just like commuting down the 405 for most people here in Los Angeles. So, I look for communication. I look for investors that are entrepreneurs that can really communicate and communicate well, because if we're going to spend this much time together, we can't have, I say, lines, not dots. I can't have sporadic communication from you and truly understand how to help the business or what needs to be done.
Fair enough. What about though on geographic?
Yeah, geographically, so right now we're New York City in hardware and Internet of Things. And it's been shaping from consumer technology to enterprise technology, and now we're looking at connected cities, kind of the evolution of IoT is kind of like mobile. It's everything. So trying to think about it in silos. Here in Los Angeles, as an example, this cohort for the sports entertainment technology, we looked at 33 countries and over 1,000 companies to find the 10 that we brought here. We're seeing great ideas come out of everywhere.
But what about the companies in terms of the markets that they're attacking? That's more my question.
Well, primarily, market number one is here in the
You're
U.S.
still seeing that. Elizabeth, what about on your side?
So we're geographically agnostic, but what we're looking for in every market is essentially companies who have product market fit or are near product market fit. Specifically, what I mean by that is like the unit economics work out. And so I talk a lot with Adam, our venture partner in Israel. I think one of the key differences actually that we're noticing between, say, companies in the Bay Area and Israel is, while in Israel there are a lot of very tech-heavy companies, this is a little bit of generalization, what we would like to see more from the market as a whole is more emphasis on like customer acquisition, even in parallel to development, and just getting those unit metrics so early on. How much does it cost to get you a customer, or even if they're just a lead? How much are they paying you? Like, get those sales upfront and early rather than perfecting product first.
Got it. Amit, what are some trends you're seeing, maybe since you're actually based here in Southern California? What are some trends? I mean, it feels like LA has been in and out, of the market in terms of maybe its, deal flow and quality.
What do you mean by that?
The network.
LA is always in.
Yeah, all right.
No,
See, it's good. Now we have some tension. We have some.
I just wanted to create some tension.
No, I appreciate
make
it.
It interesting.
I appreciate it. You can throw some water at you.
There you go. What's the question again?
Yeah, you see? You're too busy being argumentative, damn it.
Yeah.
LA in terms of, is there a certain sector of deal flow that you're seeing, out of the LA market? And what's your sense of how the market has really evolved over the past decade in Southern California in particular?
Yeah, I mean, there are a lot of ways to slice and dice the market, but we looked at some data last year and saw that LA was Southern California was the fastest growing tech ecosystem in the U.S. That's faster than New York. That's faster than Silicon Valley.
What percentage of your investments, by the way, are Southern California?
60% Southern California, 50, just under 60%. But I mean, we are very much open to investments anywhere in the world. We do like folks, obviously, that are closer to home because we tend to do earlier stage investing. One of the things I like about Israel, and one of the reasons that I'm here, other than Sharona, who's a dear friend, is I like the hard tech that a lot of the Israeli companies are building, and I like the fact that they're going after real problems with big visions. And so we're trying to see a little bit more of that here. Another benefit of LA is we have 3 of the top computer sciences schools right here in LA, graduating more computer scientists, arguably than any other geography as well. Dylan, I think you're nodding. I think that metric is correct. I think with the Harvey Mudd, the Caltechs, USCs, and UCLAs, I think we graduate more computer scientists here than we do in any other place in the country. So that's creating a very good opportunity.
We have to get you over to Israel because I think per capita they probably have more.
Yeah, you guys probably have us beat in terms of per capita.
University. Yeah. Actually, I know some of you haven't even been. Not to put you on the spot, how many have all of you guys been to Israel? All right, so we got to get the audience. Make sure to razzle these guys later that they have to get over to Israel because they can't. You can't really appreciate the technology innovation until you've been sort of boots on the ground. And I can tell you from our firm, we've grown our investment team both in Tel Aviv and in San Francisco, but we make it a point that all of our investment professionals in San Francisco travel pretty regularly to Israel. And it's been eye-opening. Of course, unfortunately, with everything that's been going on, I guess, geopolitically, they've been there during really challenging times, but it's amazing, and it's really appreciated by a lot of the Israeli entrepreneurs showing the support that were over there. Suraj, what about on your side? I mean, you got a lot of the buzzwords in that sort of last statement, but IoT, big data, et cetera. Maybe something in terms of a sector or area that you're looking at that is maybe somewhat fresh and new and different than maybe you were looking at 10 years ago, and that maybe some of the entrepreneurs here would appreciate hearing about?
Well, I mean, the new sectors like on-demand economy. I mean, we it's not something we actually invest in. It's we as a firm we are still trying to figure out the economics. And there's, with the exception of Uber, with the rest of the companies, we are still wary of what the public market will bear in terms of a lot of these on-demand companies going public.
You mean I don't know, Airbnb? You're not a fan? You think it's going to go away?
No.
And that's okay.
No, with the exception of Uber, Airbnb, and there are a few other companies, but in terms of unless we get these companies very early, I mean, unless you're the cream of the crop, or unless you're industrial a leader in what in.
But isn't that true with just about every sector and every company? Like the market leader typically gets 60-70% market share and dominates the market.
I would argue in the cyber security space, there's a lot of variation of companies. So if you were to put a bucket of security companies versus a sector of on-demand economy companies, I would bet on the cyber companies, and I think that's what Israel has really excelled in, in great engineering talent and finding products and stuff like ways that will really, really innovative. So that's one of the sectors. The other sectors like big data analytics, especially in healthcare, that's becoming really huge now. I mean, just 5-10 years ago, it was really difficult to find companies that were excelling in this stuff. And then if you talk about, of course, the Internet of Things, it's still at its infancy. I think there's a lot of buzzwords around that.
Are there any IoT related companies here in the audience? Yeah, because it's okay. So it's interesting because I was actually on a panel yesterday in Northern California, and it was actually an IoT panel, and
yeah,
there were no startups actually in the IoT related. Anyway.
And even with IoT, I think the analytics part of it, it's kind of interesting. Salesforce at Dreamforce just introduced a product called IoT Cloud. Amazon has on the AWS, they're doing something with IoT. So I think that's kind of interesting. I'm very bullish on healthcare. I think healthcare is going to change in a huge way.
Any healthcare companies in here? Just one?
But you can't raise your hand twice. Okay, unless you're IoT
healthcare, right?
Exactly.
Yeah, and then the other sector is on robotics and AI. And if you combine that with big data, which is essentially, but at the end of the day, you really have to find a use case to all this. You can build something that's commonplace, but you really have to find a sector in which you really want to tackle, and you can generate money. I mean, there has to be a product market fit, and at a certain point you have to show scale and metrics. Otherwise, investors are not going to just keep feeding money to you.
Let me jump back now to Israel, to Audrey and Esther, that are sort of boots on the ground. There are very fancy, expensive Dolce & Gabbana shoes, if that's who makes it. I don't really know. But the rest of us are just wearing sneakers. So I think
I have to work in the U.S. because I always wear heels. I don't think any of my counterparts in Israel wear heels, but that's okay.
So you didn't
Which
think
ones
this
have the red bottoms? Are those?
This is a fashion panel. You guys weren't expecting that.
Was yesterday.
So, I don't know the exact metrics, but Israel's, for the last couple of years, definitely growing probably 25 to 50% per annum in terms of M&A activity. They're having a gangbuster year so far in the first half of 15. I think it's way ahead of track. Probably
it looks
5,
like it'll
6
be
billion.
about $5 billion.
Yeah, about 5-6 billion.
In only half a year.
In terms of M&A, activity. So some good. I mean, it's probably skewed a little bit from what is it, Fun Tech, that was $1 billion plus outcome. But what are you guys seeing? I think specifically, I love your opinions on the Israel market for 2016. Is it going to keep going up and to the right? Are we in this kind of crazy bubble and, you're doom and gloom? Any predictions? And I want hardcore predictions, and we're going to come back next year and there's going to be accountability. Esther, I don't know. You shouldn't be laughing. You go first.
There's a psychiatrist that said that in relationship in the family, every 8 years there's a crisis. And if you survive the first 8 years, like the love story, then in the next 8 years you understand that there's actually a business to manage here in the family. And then if you survive that, then there's the next 8 years. So I think 2000 was the first crisis, 2008 the second one, and we'll probably 2016 will be the third one.
So 2016, terrible crisis. You heard it here.
But it's not as terrible as 2000, and even less terrible than 2008. I think now we are growing. We understand that we have to manage our business.
Yeah.
And I think we're ready for the crisis, and we'll probably know how to deal with it.
I think in the Bible it was 7
Hopefully.
years, but, a feast and famine. But
it's
okay,
8 years.
7 plus 1, whatever,
So Esther is very smart, as we all know, but I respectfully disagree.
All right, now we're getting it. We're getting a little...
All right. So I just, again...
Do we have boxing gloves? I'd love to take this up to the next level. All right.
Great.
Go.
So I just looking again, let's say just look at last year. Last year
and I
there
think
was...
you said you didn't like her shoes either before. Wasn't that right?
she has good shoes. I might take them from her later. So just let's look at last year. Last year there was about 4.8 billion invested into Israel, and there was about 15 billion in exits.
Yeah.
There were 20 IPOs, and about 55 M&As. And what we've seen dramatically just within this year is the huge influx of private equity money that we had not seen before at levels that we hadn't seen before, and also the enormous influx of capital from Asia. I mean, just particularly in our offices, almost every day in the OurCrowd offices, we have delegations all throughout Asia coming to just, seemingly deliver buckets of money to invest in Israel. Yeah. And they've seemingly over the last year just discovered the opportunity. There's been people who've been investing for years, like Shirley Kashing from Horizon and so forth. But we don't see this trend reversing, and I hope the crisis doesn't come, and hopefully that.
But maybe I don't disagree. But on the other hand, if we drill down, there's only been 6 IPOs roughly out of Israel this year. In contrast to the 20 you mentioned, there's probably 20 more teed up over the next 2 years. Yep. They're expecting maybe 5 to go out and raise $500 million. So it's from an IPO perspective, it's way below kind of what what Israel's done historically. So maybe that's trending.
OurCrowd exists, and they, it's like an IPO in a way because they are raising money from.
Actually, I mean, you're completely right. I mean, I think the whole secondary market has changed over the past 20 years. What is a private and a public market? Maybe to switch topics and gears, Elizabeth and Dylan, I'd love to have you guys chime in. What sort of advice would you give to the entrepreneurs? I mean, you've invested in 1,200 companies, or 1,201 as we spoke.
I don't know. Yeah, probably.
Since the panel started, there should be like a GDP kind of measure. So what sort of, friendly mentorship advice, Elizabeth, would you provide and Dylan after?
Yeah, so, I mean, we're big on unit economics. I mean, quite frankly, looking at the market size is kind of bullshit in my opinion. You don't actually know how big the market will be until the company's either big or bust.
You're channeling Dave now with this language. I like that. I can feel it.
That's what wearing shoes.
Team, how do you know whether a team is awesome, especially if they're first-time entrepreneurs? We back a lot of first-time entrepreneurs. The only way is through execution. So what we're really looking for is unit economics, and specifically what I mean by that is go out and hustle and get your first customers. We see a lot of entrepreneurs, and I've met with a number of entrepreneurs at this conference specifically who have raised a fair bit of money, anywhere between $500,000 and $2 million, and have spent a lot of it building product, and then it's okay, now we're going to go to market. You need to, in parallel, start building relationships with customers, even if the product isn't ready. Start selling, pre-sell. Pre-sales is the best way to get an indication of whether somebody really, really wants your stuff.
Now,
And
I gotta
that's
ask,
what I would encourage.
I got to ask, if you're investing $100,000 as your median check size, you said.
Yep.
I mean, so what does it take? Is it just hey, I like the sport jacket the guy's wearing. He sounds intelligent. He's an IIT grad. Here you go.
It's the unit economics. The way that we are looking at companies, you talk about on-demand. When we've done a lot of on-demand, and what we look at there is how much does it cost you to get a customer? And based on some sample size that you got, and how much are they paying you? It's really just sort of the basic tenets of business.
The KPIs, the key performance indicators, like customer acquisition costs, churn rate. For
the
example,
4 KPIs
lifetime value of a customer.
Yep, the 4 KPIs I'm most interested in. How much does it cost you to get a customer? How much are they worth to you? How much are they paying you? And actually paying you, not just hypothetically or projections. How either engaged are they in terms of how often do they buy? Or if you're a SaaS company, the flip side is how often, what does the churn look like? And then lastly, what is your growth? Those are the 4 things. If you just had one slide and had those 4 things, and maybe a sentence about your business, done.
But would you really, I'm getting back to my other question, I'd ask it the other way. If you wrote $1 million check or a $10 million check, would it still be the same process for your $100,000 check?
Well, since we don't write those, I wouldn't know.
Oh, all right.
I just want to follow on your investments, or
so we do follow on, but that's a strategy we're actually, frankly, reevaluating. I mean, so we now have 1,200 companies. We've seen the data.
Yeah.
Frankly, my perspective is if you're following on, say, at the A round. Very often, not a whole lot has been de-risked since the seed round. I mean, in some cases, yes,
sure.
But in other cases, no. And so how do you know our first checks actually get a lot higher returns than those follow-ons. So this kind of goes counter to many
you're too young,
VCs.
but I would even argue that today a seed round of $3 million is really 15 years ago what was a Series A.
Yeah.
And so the whole market's gone a little bit crazy, and it's hard to define what the hell a seed is versus a Series A. And,
there's seed,
and even
C+.
to your point about the public markets, like an IPO, we have companies that are trading in the billions that are private, and it's like, I mean, by all measures, they're public. You know, when you look at Microsoft went public and raised $50 million at, you know, $500 million or something like that in their IPO, and we're sitting here debating Uber's value at $50 billion, you know, Facebook at $50 or $100 billion. I mean, these are effectively public companies, you know, and so the whole world has
Facebook
really changed.
is effectively public company.
I would agree with that. I would agree with that. Dylan, what about on your side? What sort of, you know, mentorship advice, you know, lessons learned, you know,
I'd say for me and our group, we have a long courtship, which is really tough on a lot of entrepreneurs trying to get the money and get the deal done. But we would spend at least, you know, 90 to 100 days in having conversations on a weekly basis. So for me, it's follow-up and showing traction and progress. So the KPIs you talked about, but I want to see if you're actually executing, and if the KPIs are staying the same. A lot of things for companies we haven't made investments in, the KPIs completely change from week to week, and they don't make sense. So we just kind of look at the numbers and how they're doing it. We have one company, kind of to back up, we've started actually doing a balanced portfolio approach as well. So we'll take 2 to 3 very early stage companies, ideas, and some first or second time founders, some mid stage companies, and then some later stage. We have one company as an example that is just a seed, has raised a seed round of $3.5 million, but they're going to do close to $300 million in transactions this year alone. A year, that's almost 10x of what they did last year.
You know, yeah, you want to know that. I'm a little bit amazed, guys. Like, people, I mean, listen, I understand the metrics that but you know, some of you, maybe not all of you, seem very focused on metrics as opposed to just, to me, it's much more about the people. Well, I mean, because invariably, you have to like these companies zig and zag multiple times. And
you have to like them. As I say, I spent a lot of time with these people, and so, you know, I hate to go back to this old example, but it's the airport test. If we get stranded in JFK for 8 hours, could you and I hang out for that long?
I mean, what we're really looking at, though, is product market fit. Like, you can take awesome entrepreneurs, and if they don't get to product market fit, that company fails.
Yeah.
Like, just looking at the data
Then they're not awesome, though.
I'm sorry?
Then they're not awesome.
Ooh.
Well, I mean, if they've had a successful exit before, it doesn't guarantee it'll be successful. In fact, if you look at the data, it's very incremental difference between first-time success and
we've also seen a lot of entrepreneurs success. Maybe to that point that are, let's say, amazing from coming out of enterprise, and then all of a sudden they said, hey, we want to start a consumer company. And I'm like, well, I mean, that's not what you're necessarily great at. So maybe they're great, but maybe they don't get the product market fit. Could we jump out to the audience? Any questions? Don't be bashful. I'm sorry, we don't have time for any questions, folks. Thank you for playing, though. Well, I guess we're done. All right. It's hard to combat with lunch in the next room.
It's very hard. You whetted the appetite, and I want to thank you all very much. But before we do, I want to mention that it is birthday time for one of our audience members, and we would sing you happy birthday, but instead of just a big round of applause and happy birthday, may it be a fabulous year and a great ROI for you, Audrey.
Thank you. Thank you so much, Sharona, for my birthday wish.
It's good that you're celebrating your 26th birthday with us. So accomplished, so young.
I thought it was 26 last year.
It's a redo, all right? But I want to thank you all. As you know, we have these wonderful gifts for everyone, and you have your dosh. This is a dosh for you, I know these are our very beloved character cartoon. It's also a business card holder because we take art and we turn it functional. Here. So thank you, Bruce. Thank you, panelists. Please bombard them during lunch. Have lunch, but come back after lunch because we're going to have the funniest guy you'll ever hear from. Even though we already had our comedy session, and you'll have.